Soon, the wait is over. The US Central Bank is set to lower its interest rates for the first time since 2020. Felix Brill, the Chief Investment Officer of VP Bank, will now explain the significance of this move for financial markets. Felix, the Swiss National Bank has lowered its interest rate already, the European Central Bank as well. Why did the Fed in the US wait for such a long time?
Well, maybe the Fed was just considerate. They wanted the others to take action first for once, but on a more serious note, the US economy was just doing too well, and by cutting rates too early, the Fed would have risked that inflation returns quickly. But now with the latest inflation reports showing a cooling inflation trend, I think that risk is off the table, so the path is clear for the Fed to cut rates.
Does it matter for investors how many times the Fed will lower its interest rate this year?
I mean, yes, for sure. I mean, lower rates have a direct impact on money markets and on borrowing costs. But having said that, for most investors, I think it's not the most crucial thing that could happen. Of course, one cut more or less is to some extent important, but it's not crucial. So I would recommend not to be caught in the hype around Fed expectations. We try to do that on our own. We try to stay focused and calm. But sometimes I have to admit it's easier said than done.
And what do lower interest rates mean for bonds?
That is, in the short term, very positive if you have bonds in your portfolio, because with lower interest rates, the prices of bonds go up. So you have a higher valuation of those bonds, and then you can decide to sell them at these higher prices or keep them in the portfolio until they mature. Over time, we will see more the negative impacts of lower interest rates in the bond portfolio, because the more bonds mature, the more you have to reinvest in newly issued bonds at a lower interest rate.
The investment committee decided to leave the portfolio allocation unchanged. Why?
I think we are at a very crucial juncture right now. In the past, whenever the Fed cut rates for the first time, sentiment can shift and go either way, basically, and we've seen that over and over again. And these times, I think it's not wise to take extreme positions in a portfolio. We rather recommend to align the portfolio very closely to your long-term strategy, and with that we ensure that the portfolio is very well diversified.
Thank you, Felix. And that concludes our view, the questions. I hope you join us again next time. Goodbye.